Dirty dealings, corporate battles, consumer woes. This is Evening 5. The ringgit is said to be poised to extend its rally after what's likely to be its best quarter since 1973, as Bank Negara will probably refrain from cutting interest rates. A Bloomberg report highlights that the currency has risen more than 12% against the US dollar so far this quarter, making it the best performing emerging market currency. Citing analysts, it said narrowing rate differentials with the US, improving trade performance, and attractive asset valuations may help the ringgit strengthen further. It noted that robust economic growth and a potential pickup in consumer prices if the government proceeds to remove some fuel subsidies may keep BNM on hold into 2025, even as other central banks start to lower borrowing costs. Foreign investor flows and further conversion of foreign currency deposits will also support the ringgit, which jumped to 4.1815 at noon last Friday. At last look, the local currency was at 4.1935. According to the report, market indicators suggest the current surge in the ringgit may be stretched, signaling a potential consolidation in the near term. On a longer-term basis, though, Bank of New York Mellon strategist Wee Kun Chong reportedly said there is no doubt that the ringgit valuation is attractive and cheap based on the effective exchange rate. The Securities Commission has outlined several conditions for single-family office vehicles to be eligible for the recently announced 0% concessionary tax rate in the Forest City Special Financial Zone. In a statement, it said the scheme is open to those who establish and operate an office in Pulau 1 Forest City. To qualify for the initial 10-year period, the SFOV must be a new locally incorporated investment holding company and pre-register with the SC for the said tax incentives. It must hold assets under management of at least 30 million ringgit and meet minimum local investment in eligible and promoted investments of at least 10% of its total AUM or 10 million ringgit, whichever is lower. Annual local operating expenditure must be at least 500,000 ringgit and it must employ at least 2 full-time staff, of whom at least 1 is an investment professional with a minimum monthly salary of 10,000 ringgit. To qualify for the additional 10-year period, the SFOV must then hold an AUM of at least 50 million ringgit and spend an annual local OPEX of at least 650,000. It must also employ a minimum of 4 full-time employees. The SC aims to operationalize the scheme by the first quarter of 2025. Pharmaniaga has announced the resignation of PricewaterhouseCoopers as its external auditor. In a boss filing, it said the resignation was voluntary. Pharmaniaga noted that PwC has served as its external auditor for the past 19 years and said the subsequent appointment of new external auditors will allow a fresh perspective for the company. It said the change is also intended to align with its group-wide approach to streamline its external auditors. In the filing, Pharmaniaga said its board has approved the appointment of Ernst Young as its auditor for FY 2024. For the first half, the group posted a 4.3% increase in revenue to 1.8 billion from 1.73 billion a year ago. Net profit jumped more than 5 times to 28.44 million ringgit from 4.61 million ringgit thanks to cost optimization measures. These include the cessation of non-core and non-performing businesses and lower advertising and promotional expenses. Pharmaniaga Managing Director Zulkifli Jaafar recently said that it expects to secure the approval of Bursa Malaysia for its regularization plan by next month, which is crucial to lift the company out of its PN17 status. Pharmaniaga's share price closed down 1.3% at 38.5 sen, bringing the group a market value of 555 million ringgit. AirAsia expects its expanded domestic network and additional seats to boost revenue for the year by 10%. It is adding 2,000 weekly domestic flights and 150,000 seats across 40 key routes by the end of the year. The aviation arm of Capital A hopes to see its domestic market share increase to 64% from 53% currently, with 1.7 million seats available for booking by December. The increase in capacity comes ahead of the peak season for air travel in the 4 fourth quarter from year-end holiday demand. According to the Malaysian Aviation Commission, Malaysia's air passenger traffic rose 12.7% year-on-year to 8.7 million passengers in August this year, thanks to a surge in international travel. However, August figure is 1.5% lower than July's 8.8 million passengers due to lower domestic air passenger traffic. AirAsia Malaysia MD Datuk Captain Fareh Masputra noted, like many other airlines, we are navigating challenges such as aircraft shortages and supply chain disruptions. Separately, Capital A said it will hold an EGM on October 14th, where the proposed disposal of its aviation business to AirAsia X will be tabled for shareholders' approval. The meeting for holders of the redeemable, convertible, unsecured Islamic debt securities will be held on October 1st. Shares of Affin Bank jumped today following reports that Bank Negara has given its nod to the Sarawak government to acquire a majority stake in the banking group. Reports from the New Straits Times and the Borneo Post over the weekend indicated that an official announcement regarding the acquisition was expected within a week. A media invitation sent out this evening confirmed that the deal will be formalized on Friday in Kuching. At the close, the stock gained 4.5% to settle at 3 ringgit, valuing the group at 7.2 billion ringgit. In July, Sarawak Premier Tan Sri Abang Johari Tun Oping told The Edge that Sarawak expects to formalize a deal to raise its stake in Affin Bank to about 30% in about a month from 4.8% now. And the Armed Forces Fund Board, or LTAT, currently has a 28.88% stake in Affin Bank, while Baustat Holdings, which is wholly owned by LTAT, owns about 20%. The second largest shareholder is Hong Kong-based Bank of East Asia with a 23.93% stake.